Today in the grain market, soybeans were down. That U.S.-China trade talks did stall and put some pressure on the market, along with the fact that there's 76% of the crop that's already planted. Futures did match yesterday's low, but it seems to be that there's just some technical support here holding the market up from really declining any further. But we're still in that same channel that we've been in since early April. July was down 11 and a quarter cents. We got down to 10.40 and a half. And basically, we're just 4 cents off the low for the month of May. So we really pulled back a little bit. Option open interest for the November added 3,700 to the put side, but we do have more calls than puts with 141 calls, 108 puts. I think that bodes well for new crop futures going forward. CVAL for soybeans is at 16.7%, with the oil at 39 and meal at 19.2%. Corn today was lower. The rain is in the growing areas is good for early development, and that really even includes beans. So that did put some pressure on the market. Corn is 87% planted, and it is the end of the month here, so there's some profit taking. But there was a bump also in the ethanol production that we were looking at coming out of the EIA. July was down 2 and a quarter. We got down to 444 and 3/4, but we were above yesterday's low, and yet we're down 18 and a quarter cents for the week. Now, December options added 3,000 to the call side with CVAL at 24.6%. Wheat today was the firm one. It was unfavorable weather for that spring wheat that gave the market a little bit of support. It's keeping futures, though, somewhat steady, with July having a modest 7 and a quarter cent range. But we were up 4.5 cents. We got up to 538 and a half before all is said and done. Now, futures did spend some time in lower territory, but trading mostly steady to better today. In July open interest, we sold out 1,700 of the call side, but there's still 120,000 open interest on July calls against 55,000 only on the put side. CVAL for the wheat is at 27.7%.